Afternoon, and a huge welcome to the latest installment of TaxCalc TV. This is the channel that you need to keep up with the very finest curated content for accountants. So far this year, we've already looked at crypto taxation, we've looked at practice cash flow, we've looked at MTD preparation, and much, much more as well. But this week, we will be absolutely thrilled to be joined by Sharon Cook. She's the Technical Director at 2020 Innovation for an important update on two issues and more that are coming down the line, which are going to affect you and your clients. We're going to be looking at the latest changes to dividend reporting, including some hot off the press updates that we've only just had that are going to affect tax planning, certainly. We're also going to be looking at agent registration and some of the sanctions that are going to be applied to those deemed to be involved in any tax avoidance activity. We're also going to be touching on the guidance around AI in tax advice. And of course, we're going to do MTD. It's obligatory that we cover MTD, and there have been some very recent, just yesterday, some announcements from HMRC, so we're going to be digging into those as well. For those of you who haven't yet met Sharon, or indeed 2020 Innovation, I'll let Sharon introduce herself, if you would, Sharon.
Lovely. Well, 2020 Intervention, that's an exciting company name.
Yeah, that'd be a new one.
Yeah,
I like that.
It's fitting. So hello everyone, thank you for having me today. As Andy says, my name's Sharon Cook. I'm a technical director at 2020 Innovation. We do training, resources, including the fantastic rossmartin.co.uk is under our umbrella, consultancy, so file reviews and the lots, and we write marketing content for firms of accountants. So that's me and that's us.
There's very little that 2020 Intervention. I think
you're going to get me in so much trouble with marketing.
I think that's going to stick.
Yeah.
We are also joined for the very, very first time by Paul Trowbridge. Paul is the principal business analyst behind the software that we call TaxCalc. He's the super brain that helps build TaxCalc itself, and he's going to be on hand to show us some of the areas when that Sharon's going to be talking about how they happen in real life in software itself. So before we start, we are very busy. We had well over 1,000 people registered to come to this today. There's going to be lots and lots of you. Thank you all so much for coming. Really appreciate your attendance too, of course. But just a bit of housekeeping for those of you who haven't been to TaxCalc TV before. There are three key icons down in the right hand corner. First is chat. Some of you already found that and using that effectively. Well done. That's for all of you to chat. Everyone will see what goes in there. Questions are for us only. So if there's something that happens, the chat does get very busy. We may miss your comments and questions in there. If you've got a burning question, please use the question section and we will endeavor to answer that in there. And finally, there is the poll section. We will be using that a couple of times today, where we've got some particularly pre-built polls, and we will be asking you for your opinions on things. So when I press that to go live, the red dot will appear, and you can go and take part in the poll. And finally, a big shout to Anushka from Eclipse, who I had the joy of speaking to about her firm on Monday. Hi, Anushka. Hope you're there. Good to see you. But without further ado, let's hand over to Sharon, because we're going to be talking about the dividend reporting. What's happening?
Well, let's get into dividends then. So before we get into new news about what HMRC are looking at, we thought we'd start with regs we already knew were coming in, but looking at the practice of how we're going to cope with these regs when we start working on 25-26 self-assessment tax returns. So, of course, last year we saw this requirement come in that for those 25-26 returns and onwards, there will be a brand new requirement for directors of close companies to disclose additional information. Now, this information we can see relates to dividends. However, it's become clear it's going to be reported on the employment pages. So when a company director files an employment page of the self-assessment tax return, and if they're a director of a close company, they will also need to give the name and registered number of that company, they will need to disclose the dividends received from that company in the tax year. Now, of course, in the main body of the return, that individual will have already, hopefully, disclosed total dividend receipts, usually just in one box. What this is asking for is what subset of that relates to this particular company. And the other piece of information we need to provide is the highest percentage of share capital, or zero, as held in the year. And it's become clear in the draft guidance for the employment pages that that percentage is to be calculated by reference to nominal value. So this is going to be new data we need to get in the habit of reporting and submitting to HMRC. And Paul's going to show us how we can do that using TaxCalc in just a moment. I just want to flag the importance of actually providing this information because there is a penalty for not doing so. So we want to avoid those £60 penalties and making sure we are making the necessary declarations. So we can see here via the highlights the anticipated new boxes on the employment pages for 25-26. This is a copy kindly provided by TaxCalc of the draft employment page for 25-26. So we can see over on the right hand side in particular the fields that we've just talked about as per the new regulations. So we're putting in the name of the close company, the registration number, total dividends received, and this percentage shareholding as calculated by reference to the nominal value of the shares. And if that shareholding changed at all during the tax year, we give the highest percentage shareholding. So who loves maths?
Quick question, Sharon. Sorry,
yeah.
quick question. Couple of very similar questions from the floor.
Yep.
Basically, very similar. What happens if the director is not remunerated? If there's no salary?
Yeah, it's a great question. It comes up all the time. And HMRC are being a bit blurry on it. So it's not covered in the guidance notes to the employment pages. However, my take on it, if we go back, this previous slide is pretty much what the regulations say. So if an individual is a director of a close company, they must provide this information. So everything in these 3 bullet points, so if you can see my mouse wiggling there, I think so, that's regulation. So that is now law, and there is a penalty that can be imposed if that disclosure is not made. So while there doesn't appear to be a specific requirement to do the employment page, I cannot see a way of making the disclosure without it. So while it's not crystal clear at the moment, my take would be use the employment page, do the disclosure, even if there are no emoluments, because I think that will be the safest and the easiest approach to avoiding the penalties for non-disclosure. Is that okay? Okay. So, Andy, you tried to put off maths, but I think we should do some maths because we're accountants. So, woohoo! We're thinking about this highest nominal value of shares now. So we've got a hypothetical company here, W Limited, and Will is a director of this close company. He has got 50 of the £91 Class A shares, and he has got 500 of 1,000 1p Class B shares. So in the chat, to the nearest percentage, what do you think his percentage shareholding calculated by reference to the nominal values would be?
Answers in the chat, please. Oh, there we go.
Excellent.
Everyone's done very well there.
Yeah, we did say to the nearest percentage, and we have got some to 1 decimal point, 2 decimal point. I think it actually works out as a clean percentage. But yes, we're looking at 55%. So what I've done to get there is we have got 90 £1 Class A shares. That's £90 worth. We have got 1,000 1pb shares. That is £10 worth. So in total nominal value, we have got £100. Will has got 50 of the £1 shares. He has got £5 worth. So 500 of the 1p shares, £5 worth. So he has 55 of the 100 total nominal value. I think I said 90 before, sorry, 90 value in Class A, 10 value in Class B. So we've got total nominal value of 100, of which Will has 55. So we get to 55%. So I can see we've had a question or a couple of questions come in about voting rights. It doesn't matter. This is simply being calculated by reference to nominal value. So it's as simple as we've just seen there for Will.
We have a whole bunch of other quick questions. Well, that probably you'll be able to bat these off, knowing you, Sharon. If the percentage changes in the year, would you make a white space note providing further info in the box?
No, you don't need to. It's pretty clear in the regs and in the guidance. You disclose the highest percentage.
Highest percentage. Okay. And what if the shareholding percent is nil because the dividends have, that's voting rights. We've covered that.
Yeah, ignore voting rights.
Yeah. And dormant companies, asked Rob. What about dormant? Oh, Rob.
We're not receiving any dividends from a dormant company, are we? Unless I am missing something there. So this is affecting directors of close companies that are receiving dividends from that close company.
And this is only under PAYE, yeah?
So the PAYE reference isn't relevant for this disclosure. So whether there's a PAYE scheme or not, if there's not, we wouldn't normally have the employment pages, which is then where it gets a bit murky. But what isn't murky is the regulations say we've got to make this disclosure, and the place HMRC have provided to make the disclosure is the employment pages. They may well put out additional guidance as we get into the 25-26 return preparation, but for now, personally, I would go for use the employment pages.
Sure. Okay.
Okay. So this is probably a good time, Paul, for you to pick up and show how TaxCalc customers can use, I believe this is a wizard, to get to this place.
Yes, absolutely. Thank you. I'll just take over sharing my screen. Just 1 second. Okay, so this is our simple step screen in TaxCalc, and for individuals that are aware of this and our simple step approach, we step you through and help as much as we can where you need to be filling in the boxes. So on the employment section, where you said yes that you're a director, you now need to say yes or no whether this was a closed company. And we've got some hints there and some tips on the tooltip. If you say yes and tick that, then you need to complete the name of the closed company, the registration number, and the percentage shareholding. So let me just go ahead and do that. Copy the name in there. Put a registration number and then the shareholding. As Sharon mentioned, if you have no shareholdings, then a zero is required. Otherwise, you put in the percentage shareholding based on the nominal value. Once that's all complete, if I click through to the next step in TaxCalc, they'll take me to the pay received and tax paid. And on here, we've got a new section at the bottom to enter the total dividends received in the year. If you haven't received any, then you're still required to complete the box with a zero, which is what we've got by default. But if you have received dividends, then clicking on the magic wand there will open up the wizard. Now, this dividend wizard is the wizard that is used to enter details of all dividends, whether they're from closed companies or not. So this individual's already got some dividends from a non-closed company and from another company that they're not a director of. Clicking on add, I can then add a dividend here that they've received from a closed company where they're a director. If you tick the first box, director of closed company, you then get the ability to select the relevant company, and that's based on the employment pages. So if you did have more than one employment from different companies, this would give you a list so that you could make sure that you select the correct one. And once you've got that, you can put the description, number of shares, payment date, but that's just optional. If you wanted to, you don't have to. And then you complete the dividend distribution amount. Having completed that, if I then click on close, that will both update the total dividends that are declared on the tax return. If I switch to the HMRC mode to show that, of the dividends on the return, and it will also put in the correct box and amount onto the employment pages for this new box 7.3. So you can see on here, this is the actual HMRC form employment pages that will be updated, that new requirement. I just thought that it'd be useful to show one other feature if I go back into the dividends that we've had in place for a few years in TaxCalc, but now becomes really useful. And that's that if you use our TaxCalc accounts production and you post dividends in that and specifically identify the shareholder director, that you can now click on import dividends and it will automatically find all of the dividends that are relevant for that individual from companies that have been posted in TaxCalc, and clicking on import will bring them into this wizard. That's just updating.
We had a few questions about that, so hopefully that's answered those. Yes, TaxCalc will drag through dividends from accounts production. Thank you, Paul.
Thank you.
There are so many wizards within TaxCalc. That's just one of many hundreds, I would say, that are buried in. It's like Hogwarts. There's so many wizards in TaxCalc. So, if we proceed,
Yes.
Sharon.
Let's move on to what is definitely not a tiger. Right, so HMRC are watching. Something is stalking us through the grass. I'm just not entirely sure what. So HMRC, so in addition to what we've just seen, that is real happening on the 25-26 returns, this brand new piece of breaking news that Andy mentioned at the start relates to a new consultation that has come out really recently. And I'm just going to jump to my next slide to show you a little more on this. So this consultation is live at the moment, and it's effectively the next iteration of making tax digital for corporation tax. We were told MTD for corporation tax is off the table. So companies will not need to be disclosing an analysis of their transactions each quarter in the same way that we're currently seeing for the sole traders and the landlords. But when MTD for corporation tax was taken off the table, it was very clear that something else is coming. This is part of, although probably not all, of that something else. So this consultation is a biggie. This is about a requirement for companies to have to report, potentially more frequently than annually, transactions with its participators. So again, we're broadly looking at directors of close companies here. And this does include dividends, but it also includes so much more, as we can see. So dividends are there, but also for all of those clients that use their company bank account as their own, all payments, whether that's via cash, bank transfers, or others, sales or purchases of assets, and any other transfers of value. Getting into the detail, it's also clear that this is going to include repayment of or write-off of director loan accounts. There is even talk of having a real-time information system for this. Now, this is at a consultation stage, but given what we've already got, it does start to set the direction of travel. HMRC are concerned about the amount of tax loss within the corporation tax small business space, and a lack of distinction between company owners or directors and the company itself is considered to be part of that problem. Now, the consultation does say the government does not want to impose any greater administrative burden than necessary, which may suggest an annual reporting cycle tied to the existing corporation tax return. But the government is keen to understand if stakeholders see any benefit in more regular or real-time reporting. This is a line in the sand, and it's only going to grow from here. So this is going to be a really important consultation to watch through. There's going to be more to come on this. Like I say, this is strike one. So we've got that existing disclosure on 25-26 of dividends and nominal value. We've got this consultation that has just launched. For the accountants in the room, we also know that FRS 102 is going to start bringing in more disclosures around dividends for small and medium large entities, usually from 2027 and onwards. And last year, we saw HMRC issue a whole batch of their one-to-many letters where they believed there was underdeclared dividend income in 23-24 returns. Taking this all together, I think we can conclude it's certainly a hot topic. What does it mean? They're watching. So they will start to get more data on dividends. Now, based on what we're putting on the 25-26 returns, I think we can all see from that piece of maths exercise we did, it isn't going to give them a complete picture. It won't enable them to cross-check dividend data to make sure that it's all been declared on personal tax returns. Even when we start seeing more in FRS 102 accounts, that isn't going to name the recipient of the dividends. But what we should be considering here is that as we go forward, how directors take funds out of their owner-managed companies is going to be under a close watch. So we can expect HMRC to be gathering more information on dividends to start with, and then potentially more, and they'll be doing analytics on that to make sure that the right amount of income is being taxed on the right people at the right time. Now, there is some concern in the profession that this is going to be specifically targeting alphabet shares, like we saw with W Limited earlier, where we've got A shares, B shares, C shares. I'm not sure at this stage it specifically is, because I just don't think they'll have the information. But hot topic, one to watch. So Andy, Paul, do you want to do anything more on dividends before we go on to look at some more cheery news in terms of agent regulation?
Oh, that's going to be fun. I think, well, the consultation has gone down very well in the chat.
I bet they're loving it. Yeah.
I mean, it's obviously there's a direction of travel here, and where that ends is I would say anyone's guess, but I think it's fairly clear. I think we can move on. I think we should get on to agent registration and get everyone really cheered up.
Oh yeah. I know you're really interested in burnout at the moment, Andy, and yeah, I think my presentations tend to lead to this, so sorry. What I would just say on that consultation is, I mean, I've only been speaking about it for a week, but obviously it's not popular. But what I would say is right now, this is an open consultation. So when we get to the budget in this autumn, we might get new rules or new announcements. At that point, it's very hard to change the direction of travel. If we feel strongly about something, like this proposed reporting of transactions between a company and its participators, now is the time to respond to that consultation and make your voice heard. So do take a look at it and do get involved, because it will affect a number of your clients as proposed. Right, agent regulation and doom. So this was a real headline.
Before we move on, could I just say to everyone, yes, there will be a recording. It will be sent out at the end. So if you've missed anything, I want to go through it again, you'll be able to go back and watch. Just wanted to make that, because I get a lot of questions, and I should have said that earlier on. That's my bad. Sorry, Sharon.
No, all good. And that gave me a chance to look at the chat, and I can see we've got a lot of planning going on about moving to Portugal.
Yes.
What I'll do before I next come back to TaxCalc is I'll research the tax position in Portugal and make sure we're not out of the frying pan and into the fire. I don't know. But the weather's better. So this is a real life headline from the ICAW towards the end of last year. We're facing an existential crisis in 2026. And the reason for that was a number of measures that were in Finance Bill 2526 that are actually now Finance Act 2026. That also got royal assent last week. It's been all go. So we have a new criminal offence for promoting arrangements that have no reasonable prospect of success. That one is not going to affect most general practice agents. If we're not promoting tax schemes, number one shouldn't be a biggie. But number two and number three definitely are. So we've got new HMRC powers to investigate and sanction advisors. These are a bit scary. They're very wide-reaching, but again, if we keep our house in order, it should be manageable. It's early doors, we've not seen it used yet, but it should be manageable. But we definitely need to be aware of these new rules. And then we've got agent registration. Now, both 2 and 3 we're going to talk about in a bit more detail, but we're obviously not going to be able to do everything today. A key purpose of this webinar was to highlight for you, firm leaders, points you need to be making sure someone in the firm is picking up on and all over. So on that sort of signposting theme, these new HMRC powers and sanctions, they are aimed at sanctioning those facilitating non-compliance. Now, this is what used to be called the dishonest conduct regime. It has been replaced with HMRC having power to tackle those that do something deliberately that brings about a loss of tax. Now, that was very concerning when first mooted, because as a tax advisor, if we advise somebody to claim business asset disposal relief, hey, we've done that deliberately and it's brought about a loss of capital gains tax. Is that a problem? No, that's not a problem. So if we read further into the legislation, it really is, other than something which is in line with the law. So if it's a legitimate business asset disposal relief claim, we're not going to fall foul of these rules. If it's a mistake, we're probably not going to fall foul of these rules. But if we know well and good that the client isn't eligible for business asset disposal relief, or they've used up their lifetime allowance, and we still deliberately advise them to claim that lower rate of CGT, then we're in the firing line. So an example that HMRC put out a few months ago was submitting a return to HMRC on behalf of a client which we know to contain an inaccuracy. Now, we're going to talk about PCRT later. PCRT already prohibits anyone that is part of a professional body that subscribes to PCRT, professional conduct in relation to taxation, from doing that anyway. It's not what we are doing day to day. If we believe a return contains an inaccuracy, we go through an error correction process. What these new powers do is going to make it much easier for HMRC to get access to tax advisor files. If they then find that there has been deliberate conduct that brings about a loss of tax other than in line with the law, the minimum penalty is £7,500, £7,500. The max penalty is £1 million. Now, what's hot off the press here is we got some new guidance on this on the 16th of March. When you get the slide pack, we will share them after. There's a link there so you can have a look to it. Now, these are extracts from that guidance. If HMRC suspects you of sanctionable conduct, they will send you a file access notice. Now, one of the key changes with this new power is they do not need tribunal approval to send a file access notice. Instead, it is approved by a senior person within HMRC. They will send that if they suspect you of deliberate conduct of something that is not in line with the law and it's resulting in a reduction of tax. Let's hope it never happens, if a person receives a file access notice, they can still appeal to the tribunal. Subject to that appeal, that file access notice means HMRC have to be given access to working papers and audit files, any documents used to prepare client accounts. If they find an inaccuracy, it's a penalty of up to £3,000 per inaccuracy. And this is across, of course, a whole range of clients. There's also penalties for not providing the papers. Now, bear in mind, this is not the sanction. This is for not cooperating at the start. We've still got the £7,500 through to the £1 million penalty if they can show deliberate conduct that brought about a loss of tax. So this is brand new. It's coming in from 1st of April this year. It shouldn't bite the vast majority of cases, but we just need to be even more careful than we ever have been. We're already operating in an ethical environment, but in terms of quality control over tax work, it may be something that the tax leaders in your firm want to look at to make sure HMRC have no reasons for these suspicions in the first place. We could defend a file access notice to a tribunal if needed, and certainly we're avoiding all but the errors that will creep through in anything that anyone does. Okay, so that's sanctions. The other biggie at the moment is, of course, the requirement for any organisation that wants to engage with HMRC on behalf of clients to register or re-register with HMRC. This all comes out from consultations that have happened over the last few years about raising standards within the tax profession. So we've seen all sorts of things suggested here over the years, including a new regulatory body, HMRC regulating agents. They're saying this is not HMRC regulating agents, this is HMRC registering agents. But as we'll see, the registration is essential to enable the agent to engage with HMRC, to view client details and so on. And the registration is only granted and maintained if that agent, that firm of accountants and the key individuals within it comply with rules that HMRC have got carte blanche to write. It's a scary piece of legislation again. Now, we've been waiting for guidance. We have now had the guidance. It doesn't really help. It does give us some new dates. So I'm not going to go into the detail here because it doesn't answer the main question that most of you will be asking, which is, when does it affect me? So for this, I'm assuming you have already got an agent services account. You'll see on this slide, if you haven't and you need to register for the first time, or if you've got a self-assessment or CT account instead, or you're providing third-party payroll services, the rules are there on the slide. If you've already got an agent services account, HMRC is saying you do not need to re-register. Hold fire, we're going to contact you. You will still need to provide additional information to maintain your registration, but HMRC will initiate that process. The key piece of information they don't appear to have said is when that start date is for existing ASA holders. I would assume it will also be from 18th of May. So I am conscious of time. This is a biggie, and we will share more information in your slide pack as to what this all means. But at a very high level, what it means for newly registered firms or payroll providers and others that need to register for the first time, and indeed anyone already acting as a tax agent and engaging with HMRC. This responsibility is at the firm level. So if we are Joe Bloggs LLP, it is the LLP itself, the entity, that needs to register. However, this new registration or additional information being provided needs to include details of relevant individuals. The definition of this is not helpful. It certainly includes tax leaders. So if there's a tax partner within your firm, they are certainly going to be a relevant individual. Again, there's more on this on the slide that I'll leave with you. For smaller firms, they're also going to need to list officers. So that would be directors, partners, even if they're not involved in the management of decision-making or management of the tax practice. Then we have got the name of the overriding body that is registered and has this agent services account with HMRC. We have got a list of relevant individuals, the people taking responsibility for tax work within that firm, and perhaps some others as well if it is a small firm. To get the registration and maintain the registration, that entity and those individuals must meet qualifying conditions. The entity has to be registered for AML, which it should already be. These qualifying conditions are the scary stuff. So tax compliance, the entity and all of the individuals listed must not have overdue returns or payments. They mustn't be subject to regulatory sanctions, insolvency, criminal convictions, or other fun stuff. They also must adhere to standards that HMRC set. And that's where this is veering into regulation. We are assuming at this stage, when they're talking about adhering to standards, they mean HMRC standards for agents, which we'll talk about in the PCRT section in just a moment. But again, this is a biggie to have on your radar. Preparation needed in the run-up to 18th of May, and then whenever your start date or request for information comes in, there'll be a 3-month period to get all the information to them. The professional bodies will have to be all over this because there's a real challenging point at the moment. Does your firm as an entity have a right to ask tax leaders, who will usually be partners or directors but might not be, to declare their personal tax position and whether they're up to date and whether they've paid their tax? So getting this information and evidencing this information could be really, really challenging. So various points to watch on that. Andy.
It is a biggie. Would you mind just recapping on the qualifying conditions for someone who needs to register? I think there are a few questions around that.
Yeah, I'm not surprised. I did it pretty quickly and it isn't clear cut. So the registration itself will be top level, the firm. So I think I said if we're Joe Bloggs LLP, it is the entity that will register in the same way as the entity that holds the agent services account at the moment. But what's going to happen going forward is for that entity to retain, or in some cases obtain, that registration. It is going to need to provide more information, including details of who its relevant individuals are, and possibly also, for smaller firms, who its officers are. So for relevant individuals, think tax leaders.
So not necessarily a junior, it's someone who is executive.
Definitely.
Right.
So it's people that are making decisions around the firm's tax function and people who are managing the tax function. Now, there's a lot of uncertainty around that word managing. My personal take on it, though it's a gut feel, it's not from this non-existent guidance, I'd personally probably equate it with practicing certificates. So we might have an individual in the firm, they're not an owner, but they're almost held out as an owner. They hold their own client portfolio. No one else is reviewing their work. So we've had to get a practicing certificate for them. That to me feels like managing a tax function, assuming their portfolio is tax. Whereas if somebody's got the job title tax manager, but their work is reviewed by someone else, somebody else is taking ultimate accountability, let's say a partner in the firm for that work, personally, I don't think that tax manager would be a relevant individual. HMRC's guidance just says managing a significant amount of the tax affairs within the firm. So we're going to need more on that from HMRC, from the professional bodies, without doubt.
Yeah, it seems somewhat subjective. Okay, so just a few questions. The chat has been relatively quiet, and I assume that's because everyone is out celebrating, you know, having a really good time partying,
booking their trip to Portugal.
Really, yeah, or planning their trip to Portugal. The travel agents are going to be busy. But Martin asks, I presume there's no talk of HMRC charging a fee for this.
That would just be the cherry on the top, wouldn't it? No, let's not put the idea in their mind, shall we? No, not at the moment. No.
I should hope not.
I'm again, personally, I would think it would be pretty astonishing if this is ready for 18th of May. But again, it's what they're saying right now. So we're going to need to start getting prepared, but noting we will have a 3-month window from the start. And just as a really practical point that one of my colleagues found, she also does work in practice. She logged into the firm's agent services account as part of this and the research she was doing for it, and noticed the contact details they had in their agent services account was somebody that had left the firm. That would be a disaster in all of this, because the email that HMRC say they're going to send, who knows where that's going to end up.
Yeah.
So a definite practical point is check your agent services account, check the contact details in there are bang up to date, and then watch out for contact from HMRC when it comes.
So just leading on from that, Kay has asked, I'm a sole practitioner, but working through my own limited company. Not sure where my ASA is within HMRC. How can I find out?
Oh, that's a great question, and one that I don't know. So sorry, I'm not sure I can really help with that. What I would perhaps suggest is there might be people in the chat that can help because they're actually registered agents. I'm afraid I'm not. And or contact HMRC's, sorry, I know this is going to be an unpopular solution. Try asking HMRC's agent support helpline to see if they can help pin that down for you.
Also look behind the fridge.
Yeah,
that's often, that's very common. Okay, so
we better have our commercial break, could we?
We're going to have a short commercial break. We will come back to your questions. We'll try and get to the questions at the end. We are going to cover some AI and some MTD, but in the second half. But just wanted to introduce, there may be some people in the audience who are not using TaxCalc, they're not using Engage, or they're not using 2020 and Ross Martin. And we'd just like to take just a short moment. I'm going to open a quick poll up. So if you are interested in any follow-up on any of these, you may take part in that poll. It should go red. So if you're not familiar with TaxCalc, we are a full-featured tax and accounts production engine, working with from the smallest firms to some of the largest firms in the country. Incredibly easy to use. As Paul just showed you, you've got very, very simple steps. People who pick up TaxCalc often do not need any training, and of course it is supported by expert UK-based, phone-based agents. And if anyone in the chat will back me up on how wonderful TaxCalc is, I'm sure you will add that in there. And if you're not using Engager we acquired as a full cloud practice management solution back last year. We're now integrated with Engager, so TaxCalc and Engager share data. It covers everything from full automation of onboarding, engagement, right the way through workflow, email communication, client portal, you name it. Engager, fully integrated with TaxCalc, is a phenomenal practice management solution. So, yep, if you're interested in further follow-ups on those, please take part in the poll. And I'll go over to Sharon, because Sharon wants to talk to you about Ross Martin.
Well, yes, just briefly. Obviously, the two topics I've covered on so far, we've already said they're moving, they're developing. So I just want to mention that rossmartin.co.uk, I know a number of you will be familiar with it anyway, because if you ask a Google search engine or a large language model or tax question, it often does cross-refer into rossmartin.co.uk, because there's lots of great tax content on there. What we also have at Ross Martin, which is part of 2020 Group, is a free weekly newswire. So it's just a really great way to stay up to date with real life tax. That site is maintained by me and 6-7 other CTA qualified individuals. We do not use AI in the production of our articles. It's all human read, human researched, trusted content. So do check out Ross Martin and that free newswire. It can be a great way to stay up to date with what's happening on agent registration, sanctions, and more.
Absolutely, yeah. I know. I've known Nicola myself for many years, and there's very little that she doesn't know. So it's
current CEO president. Yes,
yes, great to have her on board.
Yeah.
So yes, I will leave the poll open if throughout the rest of the session, particularly we're going to be touching on our MTD quarterly filer. So if you want to find out more about that, you can imply that in the poll. Let's go through a couple of these questions.
Okay.
That we've just been going through. So I'm just going to pick these up. So Claire asks, well, she shouts initially and then moves from caps to lowercase. Claire, I think I am ex-revenue, 46 years experience, but only have HMRC tax qualifications. How do I stand in all of this? It is very concerning. I'm registered with HMRC, but this terrifies me.
So professional body qualifications will not impact agent registration. So if you are running an entity that is providing tax services and you want to be able to continue engaging with HMRC on behalf of clients, you will need to register. As part of that registration, they will not, we haven't seen the form yet, but to the best of my knowledge and based on what the rules say, I can't see them asking for professional body credentials. I believe they will ask about your firm, about your relevant individuals, and for confirmation that the firm and the individuals are up to date with their tax affairs, have nothing icky to declare, and that they adhere to HMRC standards.
And Kim asks, she works with her husband and they practice under her practicing certificate. So I guess we are saying he will have to get a practicing certificate now, as I don't review his work and he deals with tax.
Yeah, so I did reply to Kim in the comments there. So what I was saying is, again, these new rules coming in for agent registration, they don't change any of the professional body requirements for practicing certificates. I mentioned that as something that I consider to be a kind of equivalent thought process. So in terms of hubby, if he's taking responsibility for his own affairs, it's going to depend, Kim, on whether you're part of a professional body, whether your firm is, and whether your husband is. But if in doubt, reach out to a professional body, because it's really important. If he should have one, he's got one, because they can come down heavy on you if not. But if he isn't a member of a professional body, I think you'd be okay. But do check with them if in doubt. And then when thinking about agent registration, if he is taking responsibility for a significant proportion of tax work within the firm, he's one of the tax leaders, I think he's probably going to be a relevant individual. So you'd need to list him to HMRC and declare his tax compliance as well as your own.
Fantastic. Okay, we better move on, because we've only got 15 minutes and we've got to cover some big stuff. So
we've packed in
AI,
this, haven't we?
Ethics,
yeah, well, I've just got a couple of things before AI that I'll just jump to, if that's okay, Andy.
Go for it.
So I've mentioned PCRT for the professional bodies that subscribe to it, which absolutely includes ICAW, ACCA, and more. Just be aware that our professional conduct in relation to taxation has been updated with effect from 1st of Jan. There are some new requirements in there. So you need to be doing PCRT training with your teams every year. So make sure everyone that needs to be is aware of the latest updates. There's also been brand new topical guidance on use of AI in tax, and my goodness, that is timely. So we're going to talk about that as a group in just a mo. Just giving you the heads up that coming down the line, we're expecting updates to the MTD guidance. That MTD guidance under the PCRT umbrella is definitely worth a read. It's, again, very timely as we are approaching going into quarterly updates. And we're expecting some updated help sheets later this year. Just off the back of what we were just talking about, I wanted to mention the HMRC standard for agents. Now, often when I'm talking to accountants who are in the main part of a professional body, we don't even mention this because it has already been made clear that if an agent is already complying with professional conduct in relation to taxation, HMRC accept that by default they are complying with HMRC standard for agents because it is similar to, but actually slightly less than, PCRT. There are some bits in PCRT that are not replicated in HMRC standard for agents. However, what we are not clear on is what HMRC are going to do as part of agent registration. Oh, I nearly slipped up into saying regulation there. We're not calling it that.
Oh, Freudian slip.
Oh, like 2020, what are we calling it?
Intervention.
Intervention.
Thank you.
This is likely to be a standard we perhaps pay a bit more attention to, and it'll be interesting to see what the professional bodies say about this and PCRT as we go forward. There are some slight differences in it, and in fact, going back to the 2024 update, it did interest me that a particular point that HMRC put into it in 2024 was that we should be using NHS mental health services if our clients appear anxious or overwhelmed. Which I was like, oh, that's good. Maybe we could stop making them anxious and overwhelmed, HMRC. Yeah. Right. So that is the standard for agents. And then here is my AI generated image of tax and AI. So let's all be impressed at that. Yes. And then this new guidance that's come out. And I know, Andy and Paul, you want to chip in here as well. What the new guidance, that it is guidance, but it's applicable to everyone who is part of a PCRT compliant body. It's great practice for anyone. It goes through the standards within professional conduct in relation to taxation, and it applies them to use of AI. So use of AI is obviously really broad. That might be an open, public, large language model, like using ChatGPT, Claude, whatever it may be. It might be an AI tool that has been acquired by your firm and it is ring-fenced for your firm's data only, or it could be something in between. So we think about integrity. We should be transparent and honest when we are using AI, as I was with the previous picture. Objectivity, we need to avoid bias, understand how the AI works and the data sources. We should provide our team with training in how to use it. We should exercise professional skepticism. And I cannot emphasize this enough. We must review the output. We all know how confident and competent the output from some large language models is, particularly where tax is concerned. It isn't necessarily correct. I had an AI tool talking to me the other day about furnished holiday let rules, which of course haven't been the thing for over a year now. So it tries its best, but it isn't always there. We must review the output. Confidentiality, do not put client data or firm's data into a public domain tool, and be professional, understand the limitations and stay aware of legal frameworks. What have you been seeing, Paul and Andy, around tax and AI?
It's interesting. I'm about to launch a series of our TaxCalc TV webinars all around AI, and we're going to be looking at this. Just the issue of, if you ask an LLM to perform a calculation, then you ask it how it came to that answer, and then you have to ask it, why did you apply those percentages? Did you choose the Spanish 1978 tax code, or did you use the correct one? And when it says, yes, I added 25% for this, did it actually, or did it actually add 18%? Because it's a black box. And I think this is one of the issues. Personally, I'm not getting a sense that many firms are really using AI in the actual compliance side and doing tax calculations, and they're certainly not relying on them. AI is being more used in the kind of peripheral of running a firm rather than anything from a tax side. I think most people are very cognizant of that, but
I think I agree with you on compliance. I think the risk is tax advisory, even if it's almost unauthorized AI use within a firm. So if the client asks a tax question going, I don't know, can I have tax relief for the cost of my staff uniforms, let's say?
yeah.
I think it's very easy for a team member to go, oh, I'll just ask an AI tool.
Yeah.
And there's probably, in that type of question, there's an 80% chance it's going to be right. But if, and actually, I think, Paul, this was something you wanted to come to, if that answer goes out of the door without review from a competent tax professional, without us being transparent about the use of AI outside of the terms of the engagement letter, well, we could end up with a professional indemnity case there. So we've got to be super careful.
Yeah, and you're not going to win that professional indemnity case either.
No, because we haven't got a sensible set of quality control procedures around that. So in the same way, we've probably got procedures about who in the firm is allowed to send out tax advice. We need to have an AI policy as to when it can be used, what the review process has got to be, and what our engagement letter says in that regard. Paul, what have you seen around professional indemnity? We had an interesting chat on this earlier in the week.
Yes. I think there's some interesting guidance out there about professional indemnity and AI, and it probably is still at the stage where we'd fall back to suggest that you consult with the actual PI insurer at this stage. But I think it's following those same principles. Interestingly, HMRC have also issued guidance on use of AI for tax software.
Okay.
Ourselves, and again, it's coming back to those points that you've got on screen there about the checking the output. And I've seen personally myself with trying to use AI to do some of the research, it often can't get the right answer because it's not trained on in the way
Correct.
that a tax person would be.
Yes.
On what you have to look at, because it's looking at out of date and irrelevant sources in a lot of cases. So
absolutely, and I think we all fully appreciate the speed of change and the nuances in tax. There's just so much, isn't there?
But I think the points that are being made in the chat at the moment around, it's like a pub now, and that guy that you spoke to in the pub who told you could claim for this is now on everyone's desktop, and that's something of a concern, because that's going to create an increased workload, because you're going to have to debunk those when they come in, and that's going to cause more problems and more stress.
Yeah,
we are running out of time, so I would like to move on to the final bit, which I think we are obliged to cover MTD, otherwise we're not doing our job. And you've got a very short poll. I'm going to put another poll live,
right.
And
let's see where we all are. Line in the sand.
Quick assessment of where you all are. So I'll put that live. MTD, is it new to you? Are you get the requirements, or are you fully up and running? So just please indicate in that poll whereabouts you are at. That would be phenomenal.
That would be good. Shall I carry on while the poll
is coming in? Most people are saying, I think what you predicted, that the practice is ready, but the clients aren't.
Yeah. There's still a lot of hope out there it'll be abolished, but
I genuinely
I think that clock has done ticking now.
A friend of my wife was assured by her accountant in January that it wasn't happening.
Right, that's reassuring, isn't it? Yeah. Well, we can keep wishing, we can move to Portugal, or we can look at the reality of the situation. And I'm afraid on reality, this is the other piece of breaking news that you mentioned in the intro, Andy. We've just yesterday, hot off the press, I was doing some emergency prep this morning. We've now got brand new regulations have come out. So again, there's a link there on the slide. So when you get the slide pack, you can go and have a look at these regulations issued, let's not lose this, on 24th of March before they come into effect on 1st of April. The reason there is so little time between the final regulations and the start date is they needed to wait for the Finance Act to get royal assent. That happened 18th of March. So it's all just got backed up to the end of the tax year. Now, these new regulations that have come out this morning, these are what the primary legislation, so looking at Finance Act 2017 in the main, has given HMRC authority to issue. Now, what we've had to date is a lot of that tertiary, a lot of HMRC notices, a lot of HMRC guidance, but we've almost gone the wrong way around. We've had guidance before we've had this secondary legislation. They did put out draft regs last July. This, what's just been published yesterday, is the update to that. In the main, that is to catch up with the tertiary legislation and HMRC guidance. So there doesn't seem to be anything new or radical in the regulations. They have got longer. They've gone from a 15-page PDF to a 20-page PDF. But again, when we hone in on what's actually new there, a lot of it is the Finance Act 2026 amends and the announcements made at budget last year around expanding out categories of taxpayers eligible for permanent or temporary exemptions. So MTD continues to be a really buzzy topic. I think, you know, what you've said in the polls today is very similar to most of the accountants that I've been talking to, that the firms are ready, not really feeling the clients are ready yet. And I've been getting a lot of questions about, right, if we're going to have to get the clients ready, what can we do with bridging software? And Paul, I thought I'd hand over to you on that, because that's somewhere where you can talk much better than me.
Yeah, absolutely. Thank you. I'm just going to take over sharing the screen for
Please
just
do.
1 minute, if that's okay. I'll try and keep this as brief as possible, which is tricky because I could talk for hours about MTD and our bridging software, but the TaxCalc particularly has a bridging solution, MTD quarterly filer, which means that if your clients are keeping their records on spreadsheets, then they can absolutely continue to do that, because you can import and then submit through our MTD quarterly filer tool. I'll just do a very quick.
If you're able to zoom in at all, Paul, it's. I don't know if you're able to do that.
Sure, I can on here, unfortunately, but I'll probably share some screenshots.
As I say, we will be sending this out afterwards. So.
Yeah, sorry, it's just with the way it is, I can't zoom in. Okay, so I'll just do a quick talk through. We've got business information where everything's set up. You got the self-employment trade, property, multiple self-employment trades can all be catered for in here. We can check the details that we got from HMRC up to date. We've got the quarterly period type, and something that you might be familiar with, that doing the calendar election, that's all supported in the software. The quarterly statuses display what the statuses are for HMRC, and clicking on refresh can call and get them from HMRC, so you can see what quarters have been fulfilled and the dates of those. We can see on here for this particular one, the third quarter's not been done yet. So if I click through onto that, it takes us through to, I think, what I describe as a command center for this particular business, that's giving you the overall position, what's been done, a full history of everything that's been submitted through the software. So you can see on here your submission receipts, if you like, that will show you the date and the ID and everything behind that. And you can also click on view the update, which will show you the actual figures that were submitted. All of this is printable, downloadable, exportable, so it's all good. You've got the full trail of what's been done. Doing the actual submission itself is really straightforward. You click on create new update. It first of all, in the setup, gets you to check the period start and end date for the quarter that you're doing. Remember, these are cumulative, so it's running all the way from the start of the year to the end of the quarter. You select the Excel spreadsheet that your client's using for the records, import that. There's an option to save it within the database if you wish. Clicking on through next gives you a preview of that spreadsheet, and mapping it to the particular fields is really straightforward. You just click and point, or you can right click and allocate. Or if you've already set this up, then you can select the mapping that's already been created. If I click on next, you can see a summary of what's going to be submitted, and then it's just another click to submit that through to HMRC. You can run a tax calculation if you wish at that point. I won't do right now, so just conscious of time. You can see that's all gone through the process. I say I could go on, but conscious of time, so I'll hand back.
Thank you, Paul. Appreciated. Yeah. So just to be clear, MTD Quarterly Filer is available. A lot of people we know are using bridging, even though they've got software clients, because they can control what they're actually submitting a lot more easily, and they get the overview of what that client has submitted across the year. And prices for that are on the site. If you want to go and hit MTD Quarterly Filer. The baseline product, which will give you 12 clients, it's actually 12 NI numbers as well, so it's not the revenue streams, is £112, and you get 50% off that if you are using a TaxCalc tax product and have an active license. So for £56 a year, you've got yourself a full MTD solution. So take a look at that. Again, you can go back to that poll if you want to explore that further and just indicate that you want to find out more about TaxCalc, and we'll get in touch. Whew. Okay, we have pretty much run out of time. Do you want, was there more to go through? No?
We have, so I think we can leave it for the slide pack. There was a little bit extra in there on MTD in terms of that guidance I mentioned about PCRT and MTD. Up to you, Andy. If you'd like us to cover it and stand for a bit, we can have a look, or we can wrap up and leave it on the slides.
We've got 500 people in the room. I say let's do it. Let's cram it in. People.
Who doesn't love some bonus tax content?
Bonus, like a lock-in.
Yeah.
Just by switching to that, I'll just pick up on one thing from the chat, which interestingly I was literally working on today. Is we are adding the ability to put a client declaration signing as part of the submission for the quarterly
great news.
updates. Yep.
Great news. So in terms of ethical professional body guidance on dealing with MTD as we go into the 26-27 tax year and it all goes live, of course, we've got the requirement to use digital software. We've also got these quarterly updates. So it's just been clarified that the quarterly updates are not a tax return, but they are still a filing. We know HMRC will not apply inaccuracy penalties to the quarterly updates, but failure to keep digital records could trigger a record keeping penalty. There will also be late filing penalty points attached to the quarterlies, but not yet. The penalty points were not imposed during testing, and it's now been confirmed they will not be imposed during year one of go live. That doesn't mean we can just not file the 4 quarterly updates, because then we could again be triggering record keeping penalties, because that regime is very much still there. We need to be holding a record of all transactions as we go throughout the year. No change to tax payment dates as part of MTD, of course, but do note that on entering MTD, we move to a new tax payment penalty regime where it is a little harsher than what we have come from. So the ethical piece then, quarterly updates that we may be helping clients submit under MTD. We do not need client approval of those on the basis they are not a tax return. So if the client has confirmed the information and records are complete and accurate, we are all good to go to submit those quarterly updates. Now, this is a theme that's sort of run through a number of the chapters we've looked at today. We do not need to audit those quarterly update figures, but we cannot be associated with a filing we believe to be incorrect or misleading. Now, a quarterly update filing isn't going to directly bring about a loss of tax. That will all come at the final year-end return stage. So we won't be into these deliberate conduct sanctions that we talked about earlier, but it's still the same principle. It's one of the threads that runs through professional conduct in relation to taxation. We need to be reasonable. So if a client's telling us their records are up to date, but there appears to be no income, we should be asking the question. We need to understand how they're maintaining their records. So some of the questions, admittedly, these were more cropping up last year than now. I think they're more well known. Can I just submit nil returns and sort at the year end? No. As a professional firm, we cannot facilitate that, that would be being associated with a return we know or believe to be incorrect, unless, of course, nothing happened in the quarter. Can I just take last year's results, divide them by 4, submit that and sort it out at year end? No, because again, we'd be being associated with a filing that we believe or know to be incorrect. So they were great tax planning ideas. I'm afraid they just don't work, unless we want the professional bodies and indeed standards for agents coming down to bite us. However, when we get to year end, we will see a new digital tax return process for the 26-27 year. That digital update that we do at the end of the quarterly submissions is a tax return. So all the processes as a firm that we have around that, so who's got to review it internally, what are our client approval processes, what does the engagement letter say, etc., etc. Very similar to what we do for self-assessment tax returns, but we will need to design new processes to fit the new digital system. Okay. So in terms of the overall framework, think about engagement terms. There's various templates out there now. I don't know if there's anything in TaxCalc, but we've certainly got templates at 2020. There's professional bodies have put out templates that anybody can access. So do look at your engagement terms. They need to be updated before you start helping with quarterly updates. Make sure your team know what they're doing. Internal procedures, I've already mentioned that. So design what that's going to look like. Professional indemnity insurance. They may show an interest in the new service lines that you're offering to facilitate quarterly submissions. And as always, stay aware of cyber risk. The more that's happening digitally, the more a firm could be affected by risk of ransomware or anything that can happen in the big wide Tinternet world. Should we leave it on that point of doom, Andy, or have you got anything clearer?
I think we can keep going, but I think we need to stop because there's a lot of kids need picking up. This is we are in school run territory.
Yeah.
But thank you very much, Sharon. Take a bow. That was incredible as always. Really appreciate you coming to join us.
Oh, thank you for having me.
Thank you, Paul. Really appreciate your input too. Couldn't get to all the questions, unfortunately. It's always the way. But thank you all so much for coming. Really, really appreciate that you join us. And many of you, every session we do, you're there. Every month we're live, and we do it for you. We do it for you. Thank you so much. Once again, if you last chance, if you want to take part in the poll, if you want to follow up from any of the products that we've talked about. I should just to let you know, we are taking TaxCalc on the road. We will be in a couple of weeks' time. In the 15th of April, we're going to be in Birmingham, but we are also going to be in Manchester, Edinburgh and London. I'm going to just put a link to that in the chat if anyone wants to join us. But please, if you, has that come through in the chat? I don't know. I will make.
I think so. I'm not sure if it's a link, but
I'm not sure that came through as a link. We'll follow up with that, but we'll be taking TaxCalc on the road. We will also be at the 2020 conference on the 23rd of April, which is always worth a good look. Sharon is going to be there.
Oh well, I'm actually going to be off Mickey Mouse bothering at that particular time, but I'll be with you all in spirit, I'm sure.
Okay, I must admit I'm not going to go now. If that's the case.
Of
course I'll be there because it's excellent.
Thank you.
And we will be at Accountex as well, and I hope you guys all will be too.
Me too.
We'll leave you to it. Thank you so much for joining us. All the very best. Till next time. Bye-bye.
Bye all.
Thank you.